la OCDE. Y saludamos a Luiz de Mello, es el director de la subdivisión de estudios políticos del departamento de economía de la OCDE. Luiz, thank you so much for having us a few minutes.
Thank you very much. Thanks for the invitation.
We've seen, Luiz, how the global economy is reeling from the largest energy crisis since the 70s. You say the energy shock has pushed up inflation to levels not seen for many decades and is lowering economic growth all around the world. How is the main inflation forecast from the new OECD economic outlook, which will be the most affected regions?
Yes, exactly. Now, indeed, the world economy was growing at a fairly rapid pace as a result of the opening up at the end of the pandemic last year. Since then, the war in Ukraine has really changed that context radically. We are forecasting now for the global economy rates of growth to the tune of 2.2% next year, a bit more, 2.7% in 2024. But what really changes the landscape relative to the situation before the war is this very rapid increase in inflation. Inflation was already picking up before as a result of the reopening from the pandemic, supply chain disruptions, factors that were really related to the supply side of the economy. Since then, we've been seeing now the impact of the energy price shock, but also the fact that inflation is becoming much more broad-based in our economies. It's going beyond the immediate impact of the supply shock. We are looking at rates for the OECD economies to the tune of 6.5% in 2023, a bit lower, 5% in 2024. It's lower than what we are seeing for the end of 2022, which will approach 9.5%. So a process of deceleration as a result of policies that have been taken place, for example, a tightening of monetary conditions, but a scenario that is very different from what we were projecting even about a year ago as a result of this massive increase in energy prices that we are seeing around the world, and especially in Europe, given the reliance of Europe on gas and energy coming from Russia.
The reliance on Russia is impacting us in Europe, and in your outlook, you avoid a global recession. Why? Which factors will help to that?
Exactly. I mean, we are not really forecasting or projecting an outright recession. Most people define a recession as 2 consecutive quarters of negative growth. We are not seeing that. We are seeing, in some cases, negative growth in a quarter or so. But we are indeed lowering our forecasts and projecting growth to be very weak moving forward. So we cannot really rule out the possibility of further weakness than the one we are seeing already. So it's not an outlook that gives us much comfort, but we are indeed, not already anticipating the possibility of an outright recession moving forward, at least over the next couple of years.
And Luiz, in Europe, the ECB maintains a recession is possible, but talks about soft recession. What do you expect?
Yeah, we're expecting for Europe, for example, for the euro area, rates of growth for GDP to the tune of 0.5%. Next year, so considerably weaker than we were seeing even a few months ago, and about 1% in 2024. These are comparatively weak rates of expansion of GDP. If you look at other parts of the world, like for instance the United States, where the numbers would be stronger than that, and for the global economy. Let's not forget that for most of the advanced economies, especially the ones in Europe, the outlook is a very fragile one. What is sustaining really growth in the global economy is the dynamic economies of Asia that have been growing at much faster pace, and that we project to continue to grow at a much faster clip than what we are seeing in North America and in Europe. So an outlook that requires attention moving forward, that requires policy action, not only to deal with the energy crisis that we are seeing, not only to cushion the adverse effects of more expensive energy on households, on firms, but also an opportunity to start laying the groundwork for the recovery over the medium to longer term. There is a lot that needs to be done in our economies to unleash opportunities for investment, for making sure that productivity growth comes back, that we can create good jobs over the medium term, and that we can then make sure that we reach levels of expansion and increases in living standards that would be consistent with a much more positive outlook over time.
And you said now we are seeing how this situation requires policy action, and in the fight against rising prices, it's important that fiscal and monetary policy work together. And the ECB made clear that all policy support to shield families and companies should be temporary and target to vulnerable households. Do you think governments are acting in the right way, or do they need to do more?
You really mentioned very important points there. The first one, making sure that fiscal policy is not at odds with monetary action. Monetary action now is geared towards lower inflation, making sure that inflation expectations remain anchored and that we can deliver this reduction in inflation over time. Fiscal policy right now, all the attention is really placed on cushioning vulnerable households and firms. What we are seeing, we are taking stock of the measures that are being put in place across the OECD membership. We see that most measures remain relatively untargeted, that governments continue to emphasize price caps or price measures in general that benefit all households, not only the ones that are most adversely affected by the increases in prices. Our advice there is to shift the attention where support is needed to measures that are much more targeted to those who really need it, measures that are temporary so that they can be lifted as the outlook improves, as the prices of energy or the markets for energy and consequently prices normalize, because essentially targeted measures tend to have a lower cost on the budget, and they tend to be more effective in terms of, again, targeting those that need it most. So we've been making the point that it's important indeed to cushion those adverse effects, but to probably focus more on those measures that are more cost effective than the ones that we have now. The world economy will come out of this crisis as it did from the pandemic with much higher levels of debt than we had in 2019, for example. So it's important to make sure that over time we work towards maintaining and restoring the sustainability of our public finances. We have societies that are aging. We have societies that will continue to demand public services of quality, and that will continue to put a burden on government budgets. So it's important to make sure that we come out of this string of crises that are affecting us in a way that is consistent with more sustainable public finances, while at the same time doing what is needed to protect firms and households in a cost-effective manner.
And if we talk about key risks and vulnerabilities, a key risk around the projections is that the associated increase in energy prices proves much more disruptive and persistent than assumed in the baseline. Past experience, you say in your projections, suggest that sizable increases in energy expenditures in OECD economies are often associated with recessions. Which is your main concern here?
Indeed, it's the energy price shock that we've faced this year is a huge supply shock to our economies. In an area where we live in societies that are dependent on energy. Energy is a critical input to everything that is produced, not only goods, but also services as well. So it's important moving forward to make sure that those prices normalize, that markets continue to operate efficiently, so that in time, that type of pressure that we are putting on our firms, on our households, can dissipate, and we can then put our economies on a path of more solid and more sustained growth. And all that while making sure that the energy transition that is so important to deal with climate change can take place. We know that there is a lot of investment that will be needed in clean energies, in facilitating this energy transition, but right now we need to make sure that energy markets operate efficiently, that prices can converge to levels that are the ones closer to what we had before the war in Ukraine, and that our economies can then ride the shock in ways that are consistent with longer-term growth as well.
And Luis, in graph we will share now, we could see how decimated share of GDP spent on energy and use is increasing to the levels of the first oil crisis in the 70s. Could we even reach the second oil crisis levels?
It's very difficult to make a direct comparison. Of course, the prices, what we are spending now, and the type of price shock that we are having this year, is extremely high, comparable in size to what we had 50 years ago. But our economies are different. We are less reliant on energy to produce goods and services, to create output in our economies than we were at that time. So what is important now to make sure is that we managed to go through this energy crisis in a way that is consistent with the price signals that we need for the energy transition, in ways that is consistent with sharing the burden of this huge shock in our society, and that we can then take the time to make sure that we build an economy that is less reliant on fossil fuel energy, much more reliant on clean energy, much more reliant on more energy efficient ways of producing and operating in a modern economy.
And finally, Luis, which are your main projections for us, for Spain? Because we are trying to avoid a recession next year, of course, and we are in a better situation than other countries in Europe when we talk about this energy shock, but we are not exempt of any kind of risks. We have it, but they are different.
Exactly. I think that what we are projecting for Spain is rates of growth of GDP 2022 in the neighborhood of 4.75. Next year 1.3. The year after 2024 a mild recovery to 1.7% at that time. The resilience of the Spanish economy has surprised many analysts. The levels of activity, of course, Spain is not disconnected from the world, so the shock to confidence, the energy price shock, all that is of course affecting consumption, it's affecting investment, it's affecting the main aggregates, the main areas of activity. But Spain is not as vulnerable to the supply shock disruptions that we've seen in the rest of Europe because of the nature of energy markets in Spain. So that is a plus in the case of the Spanish economy, as is the case in the Portuguese economy, for example, given the nature of the Iberian energy markets. So we are confident that as the global economy picks up steam as we move towards the end of our projection period, 2024, that the Spanish economy will benefit from that pickup in global demand, and that will be a factor that will sustain activity in Spain as well.
Thank you so much for this analysis, Luiz de Mello. Thank you so much. It's been a pleasure.
Pleasure. Thank you very much.
Pues nosotros nos quedamos con